Hey, what's up, guys? Thanks for joining us on the video today. If you are in real estate investing or considering getting into real estate investing, today's video is absolutely critical. Make sure you stay all the way to the end. As we touch often here on these videos, specifically in real estate investing and having that kind of deal-making team, if you will. I've been a real estate investor for many, many years at this point, and every time I get involved, particularly in a new market, there's a few things I'm looking for. One of them could be, a real estate agent or a broker. Having someone licensed on your deal-making team is always important. They can access MLS. They might be an REO agent, meaning they've got the ability to tap into bank-owned properties so you can get discounts on fix and flips, wholesale deals, for example. Knowing where and how to find deals, and obviously ultimately how to take them down, making sure there's enough meat on the bone when you dissect the deal that really the juice is worth the squeeze. There's one common denominator, though, in real estate that you need for pretty much every single deal. Now, there's some creative financing strategies out there, but by and large, you're going to need money. And what we always advocate on this channel as often as you can is to use OPM, other people's money. So what we do on behalf of the channel, obviously we play the channel advocate on your behalf. We go out and find resources that we think are going to be great to add to your deal-making team. And what we found is a phenomenal one that we're going to introduce to you today. We've spent the last 6 months vetting this company out on your behalf, meaning we have sent deals through them. We have kept our finger on the pulse, seeing how they're doing these transactions, getting feedback from investors, and time again, we've continued to get positive feedback on behalf of these folks, which is why we're bringing them on as a brand new channel sponsor today. It's my pleasure to welcome Ken King with rymak Lending. Welcome to the channel, Ken.
Thanks for having me, Mike. I appreciate it.
Yeah, no problem. So guys, having someone in your corner that's able to lend quickly, one of the things that investors obviously love and benefit from private lending, which is what rymak lenders are, is it's faster money. You're cutting through the big time red tape that's obviously involved in institutional lending. That can take months. Obviously, to go through the underwriting process, and particular asset or investing classes like short-term rentals, for example, and even a lot of long-term rental products and others in between, you can't use institutional money. So having hard and or private money lenders in your corner is absolutely critical in being successful in real estate transactions. And the ability for them to be flexible and creative is one of the things I love most about private lenders, because they can really take a look at deals through their own lens. Each individual private lenders got their own kind of guidelines on what they like to lend on, but since it is their money and it's not institutional money, they're able to make kind of bend the rules if they'd like and kind of conform to what the deal looks like, so that all parties involved are kind of getting their pound of flesh and able to move forward with the deal. So Ken, kind of tell us about rymak Lending, if you would, kind of some of the general products and the benefits to investors that you guys can bring to the table.
Sure. So rymak's been around for roughly about 3 years now, but we've been in the lending, genre for the better part of 30 years. We, as with most companies, you start watching things happen, and then ultimately you decide that there's probably a better way to do it, and we found that on many fronts, on many facets. Ultimately speaking, we do just about everything that there is, soup to nuts, when it comes to lending, but we found that this genre, this group, has a different animal. It's a different breed. And ultimately, there are quite a few different avenues that you can go down, but at the end of the day, so we have like the various different products that can help with all of your clients, your DSCRs, your non-DSCRs, your QMs, your non-QMs, and we can dive a little deeper into what all of that means. But the point of the matter is that there's a lot of options available. What we find sets us apart is the relationships that we have created with all of these different lenders. They no longer just look at you like you are a piece of paper with just a few helpful items that they either check boxes on or don't. These lenders actually listen to us and let us tell the story behind a client if need be. We do have our clients that are what we jokingly call water walkers. They come in with the 800 scores, plenty of income, and no issues. Of course, we always love to see those, but we're not afraid of the challenges either. So we do have the clients that come in the mid to high sixes, or maybe the 7 to 750 ranges, And the good thing with our lenders is as I mentioned before, they're willing to listen. So they're willing to allow us to paint a picture and say, look, this is the story behind these folks. This is what they're trying to accomplish. This is their long-term goals, maybe their short-term goals. Let's find some products that may work for them. And then there's been many occasions where we've gone to a couple of lenders before and we're able to have a discussion as to, I know you don't have this product today, but is this something that we can do soon or in the near future? Or perhaps today. And we've actually had that happen actually with one of the first clients that we worked with you. It was a very creative deal. We were able to get that one done. And I know prior to that, they had some challenges getting that deal done. We went to the lender and said, hey, let's talk about this one for a few minutes and see if we can figure something out. And not only did we, but it came out very shining, I'd say, ultimately.
No, and I know the deal that you're talking about. We won't name names, obviously, but you guys made a very, very creative deal, relatively easy. You know, it was a client, an investor that I've known for years, and obviously that was one of our test markets with you, is to see how you guys would ultimately respond and if you guys could adapt and put together a product for it. Sure enough, you did, and obviously they were extremely happy. That was an STR product for a Disney home, and you've done a lot of houses down there in Disney with us and our clients so far. So let's talk about the one-stop shop approach, which is what I love about y'all. You know, my understanding is you guys have about 40 private accredited investors that are all kind of shapes and sizes. They look at deals through different lenses, but whether, you know, if they're watching and they've got, call it a fix and flip, or they've got a long-term kind of buy and hold, or, you know, kind of the hot buzz right now is the STR, the short-term rentals, particularly in the luxury space. They can get bridge financing. Is there all of the above, regardless of what type of deal they're trying to put together, you being that one-stop shop, they can present the deal to you and odds are y'all can place it. Is that accurate?
That's actually very accurate. We have gone to great extent to try to collect as many lenders that would work in these various different genres as we possibly can. And I think we've come up with, actually, it seems like almost every single day, it feels like it may not literally be, but a new one comes to market and brings us their products. And, you know, we test them. We have very in-depth and long conversations with them about what our clients need. You know, a lot of times these lenders tend to do things backwards, in my opinion. They will put a product out and then say, let's try to sell that product. And my lenders that I work with have come to us now to say, what is it that your clients actually need? And then they're creating products for that. And those are the relationships that we have really spent a lot of time nourishing, if you will. And we found some really amazing lenders that, especially in the STR market, which was a very difficult market to break into for a lot of folks. We now have several lenders that are very STR friendly. And with the houses and the customers that you have brought us, wow, I've been pleasantly surprised at not only the results of, you know, the rates, the terms, the debt servicing sides of these things. So, you know, the houses are important. You guys have done a great job at identifying those, so that helps your clients. Ipso facto helps us, makes our life a little easier as well.
Yeah, I appreciate that. You have taken care of, you know, anyone that I've known that you to work with absolute kid gloves. They've all had great reviews up to this point, which is why you're here on the channel with us today. Guys, if you know that you want to have a discussion with Ken and his team about having a private lender in your back pocket for a critical part of your deal-making team, we'll go ahead and drop the email below. Email rymak at VIPfinancialeducation.com. That's rymak at VIPfinancialeducation.com. Be sure to include your first, your last name, the best number to reach you in VIP lending conversation in the subject line. That'll go directly to Ken and his team, and they'll reach out to you ASAP. Again, what I like about Ken and his team is they do want to talk about your short and your long-term goals so that they're not necessarily approaching you always with a product. You might have something that they can handcraft and create a product for. I love that. You don't get that in institutional lending, guys, period. You have to fit in their round circle or their square peg, if you will. And if you don't, you're simply out. So Ken and his team do a great job. So let's talk about the process. If they do reach out, you've had that conversation, what does that look like? Talk about the process, if you will, kind of from soup to nuts.
Sure. So the very first thing right off the bat is that, we do want to talk about those goals. What is it that ultimately you're trying to accomplish, not just for today, but, perhaps in the future. And it's very important to have those conversations because how we approach one particular house versus another, or one particular goal versus another, will have a bearing on how we approach the very first one that we help you with. We always want to make sure that you're setting yourself up for that opportunity down the road, if in fact that's what you're trying to accomplish. I can't imagine that there's going to be too many people that are going to be one and done once they see the results of what I've seen anyway. I've been just blown away by some of these numbers. But so we have that initial conversation. Once we get past that, then we kind of get to the nuts and bolts of things. So now I need to start getting the basic information. We are going to have to, pull credit, of course, get an idea of where we're at. As much as I'd love to just take everybody's Credit Karma version of what their score is, unfortunately, that's not the way it works. So we do have to go by mortgage scores. So Equifax, TransUnion, and Experian, we take the middle score, and that's the score we're looking for. We also need to know, how many folks are going to be on the deal as well. And then we don't really have to talk about income because most of these deals are not income driven; they're property driven.
Correct.
So it's really all about the property more so than anything else. We have to decide whether or not you're trying to close it in your personal name or in an LLC. Those elements are important. If you're going to go LLC, just quick side note, it would be best if you have an LLC in the state in which you're trying to purchase the property. Usually, like for example, here we're based out of Florida, so just as a quick example, I think it's $125. Takes you 10 minutes if you're slow on sunbiz.org. And it's usually best to have each individual property in its own LLC anyway. So you just name it the property address. It protects you in the event that, God forbid, somebody were to sue that particular property for whatever reason. It protects your other properties, so they can only go after the one. And I know that's a very extremely rare case, but, we try to look at everything and make sure that you're covered everywhere.
I want to talk about a couple of quick things. So you said that this is property driven. So let's say John Q, home buyer, he's an investor or she's an investor. You don't really care too much about that now. There's that initial credit pull, which my understanding is that lasts for 90 days, correct? So if they do want to do multiple properties, it's not multiple inquiries on their bureau. So obviously that's a great thing.
Correct.
But you guys are more concerned with the property itself. So in asset-based lending, you're not concerned, you're not pulling tax returns like institutional money is going to. The underwriting process is really a credit pull. Then you're dissecting doing analysis on the house, which, like short-term rentals, you guys are just looking at a pro forma. You're looking at, cash flow position on that. You're looking at debt servicing on that. If it's an active short-term rental,
right,
that's already going to be covered by booking. So all of those kind of ingredients go into this recipe, and then it kind of spits out your lending guidelines on that. So what would be the minimum requirements then? So you touched briefly on credit. Obviously 700 and above would be ideal, but should people disqualify themselves if they're a little bit lower than that? Or is that just going to be kind of dictate the terms and conditions?
Yeah, so look, 700, of course, that's what everybody wants. We can go all the way down to 660. The variable difference there is when you're down, we can actually go all the way down to 620. We can do 620 to 660. The variable there would be the loan to value in which the lender would be willing to give. So you're probably looking at more like a 65% loan to value with a credit score there. So you'd have to be coming to the table with a little bit more money. Now, when you're starting to pump up into the 660 to 700, your LTV is more like 75, and those that are a solid 700 or higher, we can usually do 80%. So, you know, of course, there'll be a dramatic difference in the down payment. You know, of course, common sense should say that the terms will vary, of course, as well. Your interest rates get better with the higher the score. I know that generally tends to be common sense, but it never hurts to say.
Sure.
And then, you know, the overall terms. So we have multiple different variables of terms that are available to people from a prepay standpoint, an interest rate standpoint, whether we can do interest-only payments or regular conventional type payments. So there's variables that are in play there. But basically, once you hit 700 or higher, you're more able or more likely to be able to kind of call your shot, so to speak.
Yeah, I love that. And we often talk on the channel here about getting your credit where it needs to be, guys, because the better your credit is, the better terms and conditions you're going to get, from lenders like rymak or any lender out there, obviously. So with asset-based lending, you guys are less concerned, again, about the borrower. You're more concerned about the house itself. So in that same light, what investors love about working with private money is that it's not affecting their DTI personally. So what a lot of investors do is stack these properties up, because it's what their actual income and what their debt to income ratio is personally is irrelevant in these instances. Can you kind of talk a little about that?
Yeah, so there's a couple of different things there. You hit it pretty well dead on the head. The first thing the lender is going to care about is the credit score. The second thing they're going to care about is the property itself, and the third will be the show me the money phase of this. They're going to want to see where those assets are coming from for the down payment. So they really keep it simple with these products from that standpoint. As far as the DSCR, the non-DSCR, we're seeing some pretty amazing numbers. So you have your DSCR, debt servicing, which of course, all they're really looking for there is to make sure that the property has the ability to pay for itself versus the mortgage. It's just that simple. With the STRs, the short-term rentals, those used to be substantially more difficult to debt service because there just wasn't enough data out there initially. But again, we've really worked hard with our lenders to get some more friendly approaches, more friendly appraisers as well, that have a better and more clear understanding of what short-term rental really means and how to give us the proper numbers. Matter of fact, one of the first deals we did with you guys, their mortgage ended up coming in at $3,500. The short-term rental was at $5,700. We had the very next one was amazing, actually. We were kind of helping them with a refi situation, and ultimately they were paying somewhere in the neighborhood of 12, 13%. We managed to get that all the way down into the 8s, which dropped their payment somewhere in the neighborhood of about $6,000. However, that's the most exciting one to this point, that short-term rental came back at $17,000 a month.
Mm-hmm.
Wow, what a home run.
Yeah.
Oh my God, what a home run. I was so happy for them too. They were salt of the earth folks, definitely enjoyed working with them, and to see something like that hit for them, it really fills the heart, that's for sure.
Yeah, I love that. And I love the personal touch that you give these folks too. And I've heard that time and time again as far as that feedback goes. So you touched on something there, STR lending is getting more and more prevalent. There's so many tools available now to really backfill that data, which, really data drives the STR space. We've got a couple different versions of getting involved in short-term rentals that we've mentioned here on the channel. We'll go ahead and drop the links to those videos. So there's some crazy economic times right now globally. Interest rates kind of going up, which sometimes, but not always, correlates to mortgage rates going up. So obviously there's people asking about that in your space. why more than ever right now is it critical to have a private lender in your corner? And what do you say to folks that maybe do have some trepidations about rising interest and or rising correlating mortgage rates that are maybe thinking about sitting on the fence versus getting involved? Now, we have obviously sent a lot of folks through you with tremendous results. I know that you've got a huge portfolio aside from that. So you really do have your finger on the pulse across all investment classes. What are you seeing? What are you hearing out there? What can you share with our audience to make them feel more comfortable or less comfortable about what's going on today?
Sure, absolutely. So, I mean, most of the time when I'm having conversations with any of my clients, really, we just talk about the common sense of where their money sits. You know, like, for example, I have some folks who have a lot of money in their current house. And to me, you know, as an example to answering your question, I consider that dead money. Is what I call it, because ultimately that money is sitting in your house. It's not doing anything for you. You're literally not making a penny on it. And okay, so let's say you have a 3.5% interest rate. You caught it in the best time you possibly could. It's still dead money sitting in your house. So ultimately, even if you did a refi and cashed out and took, say, a 6.5% interest rate to get that money out of there, or took a HELOC and you're paying, you know, prime +1, it still makes enormous financial sense when you're talking about the kind of numbers that you guys have been able to pull off of some of these properties. I mean, Mike, I got to be honest, when I first heard, I was a bit of a skeptic myself because I just couldn't imagine houses like this STRing so well. And I'm a hard believer at this point, man. I've just seen too much of it at this point. So I'm telling my clients on almost a daily basis, look, take the cash that's sitting in your savings account, take the cash that's sitting in your house, put it to work for you. Why? Because, okay, let's say even on an STR, let's say you're going 7-8% interest. The way these things are paying out, it's just so easy to make money on the money that you're pulling out. And then guess what? Here's the thing, and this is the most important part of this conversation. I can always fix an interest rate later. You know, when the interest rates start coming back down and things start to normalize again, and we get back to our spoiled days of seeing those 3 to 4% interest rates, I can fix that later. What I can't fix later is the housing prices. So you have to imagine, if you're one of those folks that's saying, oh, I'll wait till next year, or I'll wait till the year after. Well, you have to remember, even in the worst real estate situations, we're still seeing 3 to 5% increases in property values.
Right.
So at 3 to 5%, you wait 1 year, you know, that, you know, $800,000 property just cost you $40,000 more.
Yep.
So to me, buy now and take advantage of the increase in the value of property, and then let me fix your interest rate later. In the meantime, you're still going to make plenty of money on these SDRs, or even, you know, even your basic, if you just want to do the old school, let me rent it out to a nice family kind of thing, you're still going to make money. So why let it sit there dead?
Yeah, and I subscribe to that also, you know, and the fact that any house you buy today, I mean, barring some act of God, which obviously none of us can control or foresee, we don't have that crystal ball, if you will, but the house is going to be worth more in 5 years than what you pay for it today, right? So what smart money is doing is really getting involved in these houses now with the absolute intent to, when the rates go back down, to refinance, because guess what? As soon as they do that refi, 100% of that savings is going to convert to their net positive cash flow each month. So that's phenomenal. So the deal is going to be good today, and it's going to get better, obviously, over time.
Renters and your property value are going to pay for that house for you. To me, sometimes I you know, some of these clients, I just go, wow, you really have to stop for a second and realize the opportunity that sits in front of you. I can take care of you from the lending side. You know, there's plenty of opportunity on a property standpoint. Why wait? What are you doing? There's so much money to be made out there right now, even in a dire market. The only clients that are struggling right now are, and if I'm, you know, being completely autonomous, are the middle class and lower right now, because they don't have quite the income to withhold the interest rate issues that are going on from a conventional or an FHA standpoint. You're talking about a very different kind of market. You're talking with lavish and what you guys are doing, because you're talking about people that have disposable income that would have had that income regardless. So these houses are still renting, they're still cashing, they're still making money, and you're in a different echelon of income that allows those to continue to rent well. So it's a very different market.
Yeah, I think that's really astute. We talk about that often as well. And we do really deal and talk often about the luxury, the high-end short-term rental space. And to your point, it is really a different demographic of both investor that's really flocking to that right now. So a lot of smart, big money investors are really flocking to the luxury short-term rental space for that exact reason. Obviously, their investment's going to be collateralized by real estate, and they're tapping into really a demographic of buyer on that booking side that really does have that expendable income, really regardless of what's going on in the economy today. So really astute point, and really can't underscore that enough. That's what differentiates this class, from some of the other kind of lower demographic investment classes in real estate. That being said, though, even on kind of lower end housing or long-term buy and holds, and not related to, the luxury short-term rental space, guys, if you need a private lender, it doesn't matter what asset investment class you guys are looking at. This could be a great fit. If you are interested and you want to have a conversation with Ken and his team, go ahead and email rymak@vipfinancialeducation.com. We'll include that link below. Make sure you put your first, your last name, the best phone number to reach you at, and VIP lending conversation in the subject line. Someone from Ken and his team will get back to you ASAP. Have a quick conversation about your short and long-term goals, and take a look at any properties that you might have to present and see if it's a good fit. As always, guys, go out there and do your own research, due diligence. We're going to continue to bring resources here on the channel when they kind of pass the smell test with us, which is why rymak is here on the channel today. We'll continue to feature them as long as we're getting those phenomenal results like we've been getting. So thanks for joining us on the video. Until next time, take care. Make it a great day.